Does it make sense for me to refinance my house to pull out cash, or should I be looking at a home equity line of credit? Well, in order for me to answer that question for you, I need to talk to you about blended interest rates. So I have a scenario with a client that has a first mortgage of $300,000 with an interest rate of 3.75%, okay? And she's asking me if she should do a refinance or do a home equity line of credit. Now, for a $50,000 home equity line of credit, interest rate could be anywhere between 9 and 13%. So I know what you're thinking, that's high. But is it really? So you have a first mortgage at 3.75%, and you have a second at $50,000, and that second has a 10% interest rate, let's say, okay? The effective rate, when you look at a blended rate calculator, is 4.643%, okay? Now, if that same person were to pull out cash and do a new loan for $350,000, essentially at, let's say, 7%, that person would be paying about $2,328, while in this scenario, they could be paying $1,827. So pulling out a home equity line in this particular scenario makes a lot of sense because a home equity line is only representing 16% of the overall loan amount. Now, if you were pulling out $300,000 at a 10% interest rate, probably problematic because your blended interest rate would be higher than 7%. But it is definitely something to consider. So should you refinance your whole mortgage or should you do a home equity line of credit? Give me a call if you have any questions about this. Let's calculate your blended interest rate and make sure that you're making the right decision. So Carlden Lainfiesta, the Mortgage Fiesta, finding ways to get you cash out without you spending too much cash. Thank you.